Welcome to newwayne.com. This is ACCA professional level paper, Advanced Performance Management, comprehensive free video series. This video is on Part A, Chapter 3, Performance Management and Control. Please watch our previous videos if you haven't done as yet. Subscribe to our YouTube channel newwayne for more videos. Wish you happy learning with newwayne. There are 6 chapters in Part A. We already learned Chapter 1 and 2. This video is on Chapter 3, Performance Management and Control of the Organization. Performance Management and Control of the Organization. In this chapter, we are learning about types of variances, and also budgeting. Under budgeting we discuss different types of budgeting approaches, such as incremental budgets, flexible budgets, rolling budgets, zero-based budgets, activity-based budgets. Budgeting is considered one of the key methods of linking strategy to operations. That is, linking two different levels of the organization to achieve same ultimate goal. Budgeting helps creating details of the plans and how they will be implemented. Also, it bridges and communicates with lower level of employees. Budgeting cycle has few steps. Prime. That is, planning, responsibility, integration, motivation, and evaluation. Now we will see benefits of these steps. Benefits of planning. Budget holders are forced to plan how to hit targets that should ensure that the company's strategic plan is achieved. Example: overall sales, margins, quality levels. Benefits of responsibility. Allocates responsibility to managers and, which control our costs, also called responsibility accounting. Benefits of integration. Ensures that the planned activities of one business area does not conflict with another. Example: production and sales. Benefits of motivation. Make employees' involvement and participation. Benefits of evaluation. Trends can be spotted. Financial and non-financial control can be implemented. Variances can be investigated and corrected. My dear students, when you study, please make sure you understand all these types of budgeting approaches and their advantages and disadvantages. You may not be asked to prepare these budgets in this paper. However, questions might come due to evaluate the budgeting approaches that an organization used. And in that case, you should know the differences of these approaches. So make sure you study the budgeting approaches right way. Now let's go to each of these approaches. Incremental budget. An incremental budget is a budget prepared using a previous period's budget, or actual performance as a basis with incremental amounts added, for the new budget period. Moreover, it encourages spending up to the budget to ensure a reasonable allocation in the next period. Now we will see advantages of incremental budgeting. Incremental budgeting ensures continuity of funding for the departments without much detailed analysis of funding requirement. Incremental budgeting approach ensures no large deviations are seen in the budget, year after year, as it gradually changes the budget requirement. Also, this method is easy. Can be flexed to actual activity levels to provide more meaningful control information. With this type of budgeting, a company is likely to have stable budgets year on year. Incremental budgeting disadvantages. It usually is incremental in nature, since it assumes that this year's requirement is likely to be marginally different from the previous year. However, in reality, there may be major structural changes with respect to the company, industry, or economy which may warrant much more significant budget changes. This approach may tend to make managers spend more as budgets may be easily available, and may lead to unnecessary spending of funds which may not be warranted. Since this method assumes a slight change in budgetary allocations forms prior period, it assumes that method of working shall remain the same. This may lead to the lack of innovation and no incentive for managers to reduce the cost. Incremental budgeting subconsciously encourages higher spending so that the budget is maintained next year. Incremental budgeting may cause management to lead into a scenario called as budgetary slack, whereby managers tend to build lower revenue growth and higher expense growth, so as to have favorable variances. Now we talk about another type of budgetary approach, which is flexible budgets. A flexible budget is a budget that adjusts or flexes with changes in volume or activity. The flexible budget is more sophisticated and useful than a static budget. The static budget amounts do not change. They remain unchanged from the amounts established at the time that the static budget was prepared and approved. For costs that vary with volume or activity, the flexible budget will flex because the budget will include a variable rate per unit of activity, instead of one fixed total amount. In short, the flexible budget is a more useful tool when measuring a manager's efficiency. Advantages of flexible budgets. It highlights costs of unused capacity. Disadvantages of flexible budgets. Most costs fixed in modern business. Example of a flexible budget. Let's assume a company determines that its cost of electricity and supplies will vary by approximately $10 for each machine hour used. It also knows that other costs are fixed costs of approximately $40,000 per month. Typically, the machine hours are between 4,000 and 7,000 hours per month. Based on this information, the flexible budget for each month would be $40,000 plus $10 per machine hour. Now let's illustrate the flexible budget by using different levels of volume. If 5,000 machine hours were necessary for the month of January, the flexible budget for January will be $90,000, $40,000 fixed costs plus $10 into 5,000 machine hours. If the machine hours in February are 6,300 hours, then the flexible budget for February will be $103,000, $40,000 fixed cost plus $10 into 6,300 machine hours. If March has 4,100 machine hours, the flexible budget for March will be $81,000, $40,000 fixed costs plus $10 into 4,100 machine hours. Now, the third type of budgetary approach, rolling budgets. A rolling budget is continually updated to add a new budget period, as the most recent budget period is completed. Thus, the rolling budget involves the incremental extension of the existing budget model. By doing so, a business always has a budget that extends 1 year into the future. Rolling simply means continuous. Rolling budget continuously updated by adding further accounting period, when the earlier accounting period is completed. The rolling budget has a dynamic approach. Instead of a static budget of 12 months, it rolls forward by a quarter or a month. Rolling budget is the extension of existing budget. Hence, it requires more efforts to update and implement compared to static budget. It requires time and efforts in preparation. Rolling budget is also known as a continuous budget. Advantages of rolling budget. Rolling budget helps in planning and controlling more accurately. Therefore, it helps in reducing the uncertainty of budgeting. Rolling budget plans for near-term future instead of long-term. It helps the management to know where the company is moving in terms of sales and profitability. Disadvantages of rolling budget. A disadvantages of the rolling budget method is that business owners may end up asking their managers to spend too much of their time preparing fresh forecasts. This creates resentment if the time spent forecasting prevents the managers from completing other critical tasks. Now we will talk about zero-based budgeting. Zero-based budgeting, ZBB, is a method of budgeting in which all expenses must be justified for each new period. The process of zero-based budgeting starts from a zero base, and every function within an organization is analyzed for its needs and costs. There are advantages of zero-based budgeting. Accuracy, against the regular methods of budgeting that involve just making some arbitrary changes to the previous year's budget. Zero-based budgeting makes every department relook each and every item of the cash flow and compute their operation costs. This to some extent helps in cost reduction as it gives a clear picture of costs against the desired performance. Efficiency. This helps in efficient allocation of resources, department-wise, as it does not look at the historical numbers but looks at the actual numbers. Reduction in redundant activities. It leads to the identification of opportunities and more cost-effective ways of doing things by removing all the unproductive or redundant activities. Budget inflation. Since every line item is to be justified, zero-based budget overcomes the weakness of incremental budgeting of budget inflation. Coordination and communication. It also improves coordination and communication within the department and motivates employees by involving them in decision-making. Disadvantages of zero-based budgeting. Time-consuming. Zero-based budgeting is a very time-intensive exercise for a company, or a government-funded entities to do every year as against incremental budgeting, which is a far easier method. High manpower requirement. Making an entire budget from the scratch may require the involvement of a large number of employees. Many departments may not have an adequate time and human resource for the same. Lack of expertise. Explaining every line item and every cost is a difficult task and requires training the managers. Zero-based budgeting aims at reflecting true expenses to be incurred by a department or a state. Although time-consuming, this is a more appropriate way of budgeting. At the end of the day, it is a company's call as whether it wants to invest time and manpower in the budgeting exercise to provide more accurate numbers or go for an easier method of incremental budgeting. Activity-based budgeting. Activity-based budgeting is a budgeting method in which budgets are prepared using activity-based costing, after considering the overhead costs. In simple words, activity-based budgeting is management accounting tool which does not consider the past year's budget to arrive at current year's budget. Advantages of activity-based budgeting. Ease of use, more accurate product costing, and more effective cost control. Fewer allocation bases, ease of use, and a direct correlation to production volume. It links to strategy, objectives. It identifies critical success factors. Disadvantage of activity-based budgeting. The main disadvantage of activity-based budgeting is that it is more expensive to implement and comparatively more costly than the traditional way of budgeting. Furthermore, technical details are required to maintain to capture costs at a particular level. Now, we are learning about types of variances. There are two types of variances. 1. Planning variance. A planning variance compares an original standard with a revised standard that should or would have been used if planners had known in advance what was going to happen. A planning variance is deemed not controllable by management. 2. Operational variances. Operational variances are variances which have been caused by adverse or favorable operational performance, compared with a standard which has been revised in hindsight. An operational variance compares an actual result with the revised standard. It is deemed controllable by management. Hence, management is held responsible for operational variances. Now we talk about budget revision. Companies revise their budgets time to time. It is called budget revision. The reason is that budget revision helps the management to evaluate performance of employees, and to exercise control in more effective basis. Moreover, all the members of the organization come to know of the expectations and standards of revised budget for which they will be accountable. Advantages of revising the budget. Highlights those variances which are controllable and those which aren't. Ensures that operational performance is appraised by reference to realistic targets. Should ensure that future budgets are more realistic. Disadvantages of revising the budget. Use of revised budget may undermine original budget as a target and as a motivator. Employees may use the system to their advantage by excusing operating problems as poor planning if this method is used. Determination of revised budget may be biased, may need external information. A budget should only be revised for items that are beyond the control of the organization. Last topic of this chapter we are discussing is learning curves. What is learning curve? A learning curve is a graphical representation of how an increase in learning comes from greater experience, or how the more someone performs a task, the better they get at it. To assist in the production of more challenging budgets, a learning effect can be estimated. When new products or processes are planned, budgets may need to incorporate the effects of learning curves. The experience effect is wider than learning and covers reductions due to technology, managers, and increased volumes. Thank you for following the video fully. Please write your own notes for the topic, which will improve your memory and creativity. Next chapter is impact of external factors on performance management. Stay tuned with our YouTube channel for the next video. Happy learning with Nguyen.